Okay, so now let us look at this other question, which is in a different way than the one that Suman presented. Here we can see that this question has a trial balance and those additional informations. So let us quickly start. So the reading of the question says, Sadiksha XYZ Company Limited were under a contract last year. The contract price was 4 million. The trial balance extract from the company book as on 1st October stood as follows. So when we say a trial balance like this, the first thing that we want to do, we want to look at the bottom of it. We see, is the trial balance starting or not? Because sometimes we might be given a trial balance which is incomplete and be provided with information which is part of the trial balance which we need to finish up. But in this case, we can see that the trial balance is starting, which means this is a complete trial balance which we have been given. So quickly, let us now see what information we have been given. As already we know to say the contract price, we have it there as 4 million. And then a trial balance we have been given share capital, which is 800,000, creditors, which is 80,000, land and building, which is 340,000, bank, which is 90,000, contract, under contract account there, you see we have materials with the 750,000, plant 200,000, wages 1,050,000, expenses 50,000. And there we have cash received being 80% of work certified, which is 1,600,000. And there are the balancing figures down there. Now if you proceed to the additional information that we have been given, the first point there says plant costing 30,000 and material costing 24,000 was destroyed by an accident. So there automatically we know to say this is a loss, an abnormal loss. So we know what this is, to say this has to be credited as in our calculation. And the second bullet there, on 1st October, plant which cost 40,000 was returned to the store. The value of material on site was 30,000 and the cost of work done but not certified was 20,000. So here we can identify to say I've been given work uncertified, which is 20,000, and also we have been given material on site, which is 30,000, and we have been given plant which was retained to stores, which is 40,000. Now here, since we have this return, we need to ask ourselves, this return is the actual value of what that plant costed. This then must be depreciated. We've been given depreciation, we look at the remaining points. There we are able to note to say, yes, we have that depreciation charge of 10% on plant. If we were not given this, then we would have calculated it from the plant on site so that we can have that depreciation value. Because since this was unused and it was retained, but in our case, it has already been given, so no need to work on that. So direct, if we go to the question, we see the table there of a worked on question. So on the debit side and the credit side, so we start with the debit side there. Looking at the format of the contract account, we all know, if you have it besides you, we know the things that we need to put on debit side there. So like I've listed there to say to materials as the first thing. Here there are no workings on this, we just have to get the exact value which has been given here in the trial balance as 750,000. To plant, we have been given there in a trial balance at plant 200,000. That is the value exactly. We put it there as it is. To wages, again this value is given, so we just get all these values exactly like they are in a trial balance. So to wages 1,050,000, to expenses 50,000. Now we need to add these figures. We say 750 plus 200 plus 1050 plus 50. So this gives us a figure of 2050 plus those 3 zeros that we are cutting when adding. So this figure we need to write it separately on a rough paper. It will be used after we work on the credit part. So moving on to the credit part of the account, here again we start with the loss or the profit that has been provided in the information. When we go back to the question here, we can only identify to say we have a loss of 30,000 and 24,000 being plant and material destroyed in an accident. So since this is a loss, then we have that information we need to include here on a credit side. So that is the 30,000 and 24,000. So we need to add these two. 30 by 24 is 54. That is the 54,000 value written on the amount column there. Again, we put by plant retained to stores. So since this is the plant which was retained to stores, we go back to the question we have been given there, the one which was told, or which is told to say 40,000 plant which was retained to stores. So looking down again, we know to say there was 10% depreciation on plant. So we need to depreciate this value. So we are going to do that 40,000 times that 10 and then divide by 100. So it gives us 4, which is 4,000, including those zeros we had cut. So now we don't have to write this 4,000 because this is a depreciation value, a depreciation figure or value. So now we need to subtract this 4,000 from that 40,000 which was given, so that we remain with a figure that is remaining after removing the depreciation value. So if you do 40 minus 4, it is giving 36. There, that is the 36,000 which you are able to see in the table written corresponding to plant retained to stores. So now we go further by material at site. So now we need to find material at site. We see that this has been given to us in the question to say 30,000 and material on site was 30,000. So we just get this whole value without working on it anything because it is provided exactly. So we write that 30,000 there. Again, we go further by material at site or by plant at site. So by plant at site, we know that plant we have been given that 200,000. So that 200,000, we need now to see what is remaining at site, because we have been told to say plant worth 30,000 was destroyed and another worth 40,000 was retained to the store. So this was removed from the site and taken back to the store. So we will get that 200,000. We subtract that 30,000 of which was lost. We remain with 170. Again, we subtract that 40,000 worth of plant which was retained back to the stores. So we do again minus 40,000. We remain with 130,000. Now this 130,000 is not the amount that we are going to enter there. Mind you to say on plant there was a depreciation value, so you don't have to forget that. We have to include it here also. So what we are going to do is we will multiply it by that same 10, divide 100. So we get 13,000. 13,000 is the depreciation value again. So we need to subtract this 13 again from that 130. So if we do just say 130 minus 13, we'll get 117, and then we add those zeros. That is the figure that we are able to see here under printed site. We proceed by work in progress. So by work in progress, we have been given a percentage. If you go back here to say cash received being 80,000 of work certified. So what we'll do is that is the cash which was received was on the 80% of the work certified. So to know what was now the work certified total, because of if 80% of it was that 1,600,000 which is given there. So to find that, we just need to go to 100%. To move from that 80% to go to 100%. So we just get that same figure which has been given, which is 1,600,000. We multiply it by 100 since we need to go to 100%, to that 100%. And then we divide that figure which we have got after multiplying by 100 by the 80% which has been given already, to say this was paid there. So instead divide by 80, we will get 2 million. So that is the 2 million we see there under work certified. Now work uncertified. This, if we go back to the question again, we find it is already given to say 20,000 was work uncertified, where the cost of work done but not certified was that 20,000. So that is the 20,000 that we are able to see there. So if we need now to add those figures, those two figures. So if you see that 2 million plus 20,000, so if you just say 2,000 plus 20, we get 2020, then we add those 3 zeros. That is the figure that we are able to see there. So again, we add now this column, we find the total of it all, which is from 54,000 plus 36 plus 36,000 plus 30,000 plus 117,000 plus this 2,020,000 we get 2,257,000. So this we write it even down there in the box as a balance in figure on credit side as it is. Then we need to subtract now that figure which we had did the addition of the debit side figure which we had written separately to say it was 20,50,000, which is 2,050,000. So we need to subtract that now to find the notional profit that we need to transfer now. So we see minus 20,50,000. It gives us that 207,000 as notional profit. But to those of you who did the principles of accounting, which is associated to SCA format, this could be to cost in profit and loss, which is one and the same as notional profit in our syllabus. And then we just need to copy this balancing figure from the credit side to the debit side. and then we will transfer that notional profit now to the credit side below underneath the balancing figure by notional profit brought down, which is that 207,000. Now what we will do here now is we want to find out how much now we should transfer to profit and loss account. So to do this, we will need to use a degree of compression, which we will do as work certified, which is WC, over contract price times 100, so that we can have a degree of percentage to use in determining the profit to transfer. So if you do that, we have work certified, we found out to say 2 million. If you can see there under on the credit side under work in progress, so we do that 2 million divided by that 4 million, which is the contract price here. So divide 4 million times 100, we are getting 50. Now you need to see in which position does it fall. You see that 50% falls in the 2/3 compression of contract. If we go back to slide 11 here, we see there in point number 3, which is in a 2/3 compression of a contract. So we just get that formula which is there, which is that 2/3 times NP, which is national profit, then times cash received over work certified there. So we will go back to our working. So we will do that's 207,000 times 2/3, which is the level of the contract, times again cash received, which was 1,600,000, over which was here was 2 million. So if you do this calculation, 7 times 2/3 times 1,600,000 divide by 2 million. Here we getting 1104, so which is 110,400. So this 110,400 is the amount which we need to transfer to profit and loss account. So again we need to find out what of the remaining value, because this is not adding up to the figure which is 207. So we need to subtract now this 110,400 from 207. So we say 110,400 minus 207. we get that 96,600. So here we just have to balance it. If we had these two figures, because there is even no need to balance to add them, because we are just from subtracting it, so we know to say it's 207,000, even on the other side 207,000. So this is the completion of the contract account. Now we move to the balance sheet. You can see the formula for the balance sheet underneath there, the workings. So we have that 4 columns, 4 rows there. Those 4 columns. This is liabilities, amount, assets, and amount again. So here we just have to, if we start with the liabilities part, we just have to go back to the question we identify as some liabilities that we were given. So we find the share capital, we enter share capital, how much is its value? We find 800,000. That's the 800,000 which is there. Profit and loss account, we have this as a liability again here. So what we have to do is we don't need to panic a lot or go into further calculations. We know the profit that we transferred to profit and loss account. So we get that value 110,400, we put it there, and then we realize to say we add some loss incurred which were caused by an accident. So we just have to go back and get that 54,000, or adding that 30 and 24,000, we got to 54 as total. So just subtract 54 from that 110,000. So we do 110,400 minus that 54, which is a loss. It gives us 56,400. So that is the 56,400 there. We have, again, if you go back, we will find that in the information provided there is creditors. So we take that also as a liability and get its exact value, which is 80,000. That is the 80,000 there. Then we proceed to the credit side of the balance sheet, which is assets. So is there some direct assets that we have been given in the question? You find there is land and building, plant. So we go land and building, 340,000, just like it is here. In plant, plant here, what we are going to do is we will just add, so that we don't waste much of the time, we just go into the contract account and get these plant values. By plant retained to stores, we found to say after removing the depreciation it was 36,000. So get that 36,000 plus we go again to another information concerning plant, which is plant by site, which we have found to be 117, which is 117,000. So we add these two values, which is 36 plus 117. There we get 153. We had those 3 zeros, so it makes 153,000. Material at site. So material at site, you know this is an asset. Now material at site, we have been given a solid value. We don't have to start looking for it or calculating for it. That's 30,000 there. That is the 30,000 you see there. Now work in progress. This is also part of the assets. Now we need to find the values for this so that we include in our asset column. So we are underneath the work in progress, we have work certified, which we have already calculated this as 2 million. Work uncertified, We already have this. It was given in the question as 20,000 as a reserve. You see, work in progress reserve. That reserve figure which we have here in a contract account, you will add it also, because we will subtract this, because we see that these two, work certified and work uncertified, makes the 100% of it. So we need to subtract now this value which was reserve. So we need to do minus that 96,600, and again cash received. Cash received for that 80% completion, which was 1,600,000. So if we get this 20, when this is 2,200,000 minus this 96,600, again minus that 1,600,000, we get 323,400. So that is the figure, 323,400. If we go back again to the question to see have we depleted the assets or there are some remaining, we find there is bank there, bank, which is cash at bank, that is an asset too. So we get that value, the bank, and put it here also as 90,000. That's it is. Is there any other assets that we have left out? So if we see, we say that we have depreciated all of them, or we have used them all. So now we need to add these figures. So we start with 340,000 plus 153,000 plus 30,000 plus 323,000, 323,400, not 1,000, plus 90,000. We get 936,400, which is the balancing figure. Down here we can see 936,400. We do the same to the liability side. We see if this is tallying. If this is not tallying, then we need to see under assets where we have made a mistake. So here also we will add this 800,000 plus 56,400 plus 80,000. It brings the same figure, 936,400. So since it has balanced, then we are done. This is the end of the question. If there are any questions that may arise, or those who might want clarification, they can text me. I will surely reply to you.